Hey everyone, welcome to today's Explainer. I am absolutely thrilled you're tuning in because today we are tackling what is basically a life or death question for your financial future. We're going to take a really hard look at your current strategy to figure out, is it setting you up to survive the investment market or is it leading you straight into financial destruction? Honestly, there is no middle ground here, and getting this right, it changes absolutely everything.
Okay, let's just dive right into it. Right now in Singapore, there are so many people completely glued to their phones, obsessively refreshing apps like Futu or Tiger Brokers. You know the look, staring red-eyed at option trends, and the only thought in their head is, how can I double every single penny I have? Well, if you're constantly trying to flip your cash for a quick win, you really need to hear this. You are not investing, you are gambling blindfolded. You're playing a wildly dangerous game with your own future.
And honestly, that dangerous game traps you in what we call the FOMO trap, the fear of missing out. Be real with yourself for a second. Are you checking those trading apps constantly? Are you messing around with highly leveraged options? Because the absolute most dangerous trap of all is taking every last cent of your checking account and dumping the whole shebang into stocks, index ETFs, REITs, or crypto, just because you're terrified of missing a rally.
Which brings us to our core philosophy today. The difference between a FOMO gambler and a successful investor. A gambler puts their entire net worth on the line. They leave themselves absolutely zero room to breathe. But the investors who actually make significant money over the long term, and more importantly, the ones who keep that wealth, they never leave themselves without a safe exit plan. They never, ever put their backs against the wall.
So let's get into Section 1, the double threat scenario, focusing on life's uncertainties. We really need to shift our perspective away from the stock charts for a minute, because the hard truth is you never truly know what's going to strike first, tomorrow or a sudden accident. Life's unexpected turns are very real, guys. You could wake up to sudden corporate layoffs. You could get caught up in multinational downsizing. Or worst of all, you could be faced with an incredibly stressful family health emergency. The market doesn't just hit pause because your life hit a speed bump. So I want you to ask yourself, what if a crisis hits during a market crash? Seriously, what is your actual game plan if a personal, real-world financial disaster strikes at the exact moment the global market happens to be bottoming out? Because if 100% of your money is tied up in equities right then, you are walking a tightrope without a net. And that leads to the absolute nightmare of forced liquidation. Imagine you threw your entire 10,000 SGD into the market, and out of nowhere, a financial tsunami hits. Your portfolio is slashed in half to 5,000 SGD. If a family emergency hits on that exact day and you have zero cash savings, you are forced to sell your assets at rock bottom just to pay the bills. What was just a temporary paper loss is now a permanent, devastating reality. You've literally locked in your losses forever.
All right, moving to Section 2, your 10,000 SGD Shield and your path to micro fire.
Let's all just take a collective breath here, because we absolutely do not want forced liquidation to happen to you. We need to adopt a much calmer, grounded approach, and it's anchored on this exact number, 10,000. For most people starting out, retaining 10,000 SGD in cash, which is roughly the equivalent of 6 to 12 months of Singapore living expenses, is your foundational magic weapon. Your first step to wealth isn't opening a brokerage account to buy volatile stocks. Your very first step is securing this exact baseline.
Now, this cash isn't just regular savings. Think of it as your living reserve fund. It is a completely untouchable cash reserve built strictly for absolute liquidity and psychological security. Let me be perfectly clear about this. This money serves as a bulletproof shield. It is not a growth engine. It's there to protect you, not to make you rich. Which brings us to Section 3, the inflation myth busted, or the cost of insurance?
I know exactly what the savvy people watching are thinking right now. I bet your inner monologue is screaming, but wait, won't inflation just eat my money sitting in the bank? The interest is so small, inflation is just going to erode all my savings. And look, it's true that many people completely dismiss the idea of a cash shield because they feel like they're literally losing money by simply holding it.
But you've got to remember this crucial rule. The purpose is not yield generation, it's absolute liquidity. Worrying about inflation for this specific pot of money is actually completely backward. Extreme emergencies that require massive amounts of cash instantly, they're actually pretty rare. For almost all sudden, everyday fires, this 10,000 SGD cash reserve is more than enough to handle it safely. You are simply paying the cost of inflation for the insurance of having cash right when you desperately need it. And hey, that brings up the second objection we hear all the time. Well, if I really need cash, I can just sell my SGX REITs or stocks in minutes on my broker app. People think that just because the app is lightning fast, their money is perfectly safe. They're equating digital stock liquidity with actual financial safety.
But listen, if you are relying on your broker app withdrawals for an emergency, it just means you haven't yet experienced the cruel reality of a major financial tsunami. Yes, sure, you can sell in minutes, but as we just talked about, if you are forced to sell during a massive crash, you are bleeding out. True safety means separating your investment capital completely from your survival capital.
So, where exactly do you store this emergency fund? Well, you want it highly liquid but completely safe from market volatility. You can park your Shield in high-yield savings accounts. Think places like UOB1, OCBC 360, or the Standard Chartered Wealth Bonus. Or, actually, if you prefer, highly liquid sovereign debt like SGS, Singapore Government Securities, or T-bills work too. The point is, it just sits there, secure, waiting to protect you.
All right, let's wrap this up with Section 4, Mindset for Microfire, and the Power of Calm.
This is where making a seemingly boring, defensive move actually transforms you into a remarkably better, way more powerful investor. The Microfire roadmap is beautifully simple. Step 1, build the 10,000 SGD cash shield. Step 2, invest excess cash into stocks and index funds. Notice the order there. Only after your survival base is completely secure do you take your excess funds and chase long-term asset growth without looking back.
And doing this brings about a massive mental shift. You go from panic directly to wealth sales. When you have that shield safely locked away, a stock market crash suddenly stops being a nightmare that keeps you awake at night. Instead, because your daily life isn't threatened at all, you can look at a plunging market and see it for what it truly is, a massive discount sale on high-quality assets.
This unshakable calm, that is the true secret to long-term wealth accumulation. Because of your Shield, you never have to sell stocks just to pay next month's rent. You aren't tossing and turning in bed stressing over the mortgage. Your HDB fees are safely covered. You can afford to just sit back and wait the market out.
So as we close out this explainer, I want to leave you with a final, provocative question to chew on. Is your portfolio built for a 100-meter sprint, or is it designed to survive the marathon? Remember, victory in investing does not go to whoever runs the fastest out of the gate. It goes to whoever survives the longest in the game. Build your Shield, protect your downside, and invest with absolute peace of mind. Thanks so much for joining me on this explainer, and I'll see you next time.